Hey everybody, how we doing? Frankie D'Antonio, founder and CEO of Lexington Capital, the #1 financing source for small to medium-sized businesses all across the country. Here to give you guys another great educational video on business, and this one specifically is going to be on my industry and in my space, all right? So now what Lexington is at our core is we are a business loan marketplace for small to medium-sized businesses. So business owners entrust in us to help them get the best and most cost-effective solution to help them grow their business. And this episode specifically is going to be about alternative financing versus traditional financing, and why Lexington has been able to diversify ourselves in our marketplace and we've been able to soar over our competitors is because we offer not just alternative financing, but we've also built out relationships with major national, regional banks and credit unions to offer traditional financing. Now, there's a few differences with traditional and with alternatives, so I'm going to go over everything with you guys here today. All right, so first one we're going to start out with is traditional financing, all right? And before I really dive into it, just know that every single product and program that we offer is also offered on the alternative and traditional side. So for instance, equipment financing is offered through banks and alternative lenders. SBA, same exact thing. Term loans, same exact thing. Lines of credit, working capital, asset-based lending, AR financing. It's all offered by banks and it's also offered by alternative lenders. Now, here's the difference. Traditional banks typically are going to give you guys longer terms and cheaper rates, all right? But the one or two caveats against it is that it's going to take a little bit longer time to get funded. It might take anywhere from like 2 weeks to could go as high as like 1 month. And I've even seen certain products like SBA go out to 3 to 6 months is definitely possible. And more times than not, you're going to have to put up some sort of collateral for the business, all right? So traditional financing, to reiterate, it's going to be more cost effective. You're going to have a longer term. You're looking at 5 to 10 years, maybe even more if it's the SBA, but could take a little longer to fund. So I hope you have some time. And you're going to have to put up some sort of collateral. So I hope you have a lot of confidence in your business in order to pay back this loan. Another thing as well, a side piece, is that typically there's no early payment discounts associated with traditional financing. Now let's flip it over to alternative financing. Offers all the same products and programs, but it's going to be a little bit of shorter terms. So maybe you're going to be looking at anywhere from like 6 to 24 months. It's going to be more expensive rates, right? You're dealing with a factor rate here. You're not going to be necessarily dealing with an APR, traditional APR like a bank, but you could get funded within 24 to 48 hours. So it's a lot quicker, all right? And more times than not, I'd say like at least 90 to 95% of the time, you're not going to have to put up any sort of collateral associated with that lender. So keep in mind, traditional financing is going to be with banks. Alternative financing is going to be with lenders. So now there's a time and place for each sort of financing, and that's why it feels really good to be able to do what we do, because if somebody's qualified enough, we're going to bring them to the traditional option first, obviously. Now, obviously, there's a time and place for everything in somebody's business, and I truly wholeheartedly believe, and I know as a business owner, that at some point in time in somebody's business, whether it's once a year, a few times a year, once every 10 years, once in somebody's career, you're going to need some sort of shorter term working capital solution for your business. And if you offer traditional financing as well to these merchants, to these business owners, they're then going to entrust in you so much more to take out the alternative option. Because as we know, guys, the alternative space, it's unregulated, right? It's starting to get more regulated, and that's good. Lawmakers are starting to come in and really put some laws down, some disclosure laws, which is really good because it's weeding out the bad brokers and the bad lenders in the industry. But right now, it's still a little bit of the wild, wild west of financing, unfortunately. So if these clients entrust in you and you brought them to the best financing source in the beginning of the process, they're then going to entrust in you way more to take out a shorter term loan. And a lot of times they're in the process with us getting financing through a bank, and it's taken 2 to 4 weeks, and they're like, hey, Frankie, I could really use some money tomorrow. Do you have any options to do that? And we straight up tell them, like, listen, we definitely do. Going to be a little more expensive, going to be a little bit of a shorter term, but we could definitely get it done. And there's also usually early payment discounts associated with those loans. So once we get the traditional financing, boom, you can come in and pay that off right away, guys. All right. So those are going to be, the caveats and the differences between alternative financing and traditional. And it's just very important to have both on your platform as a broker. Last thing that I say, and it's a big reason why we make fun of our competitors and why they're just so different from us, is that we offer both of the products, guys. And it's just like, as a broker, you're a broker, right? So in my opinion, the definition of a broker in our space is somebody who offers a variety of options and solutions and products for small and medium-sized businesses. If you just offer one product and one product only on one end of the spectrum, you're not a broker. You're just somebody who offers one product. You're not a broker. So be a broker, guys. Do the right thing. Work hard. Build those relationships out with those banks, and you'll see that it'll pay off tenfold in the long run with the clients that you have. You might not make as much money at first, but you're developing the relationship with the client, and you'll have them for a lot longer of a period of time. All right, guys. Thank you all so much. Mwah. I love you guys so much. Frankie D out.